What happens when you have a mix of the most retail traders ever being bullish, Wall Street activating huge leverage trades, and obviously options flow looking towards the calls? Well, in today's video, we'll uncover the third largest trade in 2 years into leveraged semiconductors. Yes, guys, as we suspected this week, we thought that there were going to be some big moves in the semis, and so far we've been proven correctly. It was first tipped off to us with a monster trade in NVDA. But today we'll talk about how it seems to be feeding upon itself as we have hyperactivity across all markets. And boy, oh boy, is there plenty of FOMO. With Ethereum hitting into one of the key resistances and making a potential break for it soon, Bitcoin wants to join into the party. Can it get past 100,000? In today's video, we go through stocks, commodities, and cryptos because there are plenty of opportunities out there and there are a lot of markets to look at. Join us, guys. Let's get into the data right now. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss because it was big tech up across the board, but more importantly than any of this, it was semiconductors. NVIDIA leading the pack with a 3.48%. Now, we already suspected that, and as we'll share, there's some big transactions coming through right now, but let's take a look at the ugly before we take a look at the good and possibly even the bad. So let's break down this. A chart from Macro Charts showing total US speculative option volume is hitting pretty much new highs. Now, we've only ever seen this happen once before, and it was 2021, an absolute explosion in options trading volume post-pandemic. At this point, though, will we go higher? Well, traditionally, yes, you would always expect each one to be potentially bigger than the last, but this should be a chart that we need to watch in 2025 as we see more and more speculation, particularly in leveraged ETFs, which I'm pretty sure is where the problem's going to end up coming from. Retail traders going ballistic on leveraged ETF right now. We may end up going into a super bubble, and this will be something we have to look for into 2025. So should you be concerned? Well, always go into markets with a healthy level of optimism and a bit of skepticism. And in this case, that is something that we need to look at. Margin balances will matter in 2025. Let's have a look at S&P 500 seasonality. And as we know, if you are bullish in the month of December, then 83% of the time you'll be overall up and correct, which is a pretty good stat, better than probably some people's trading portfolios. But at the same time, we usually expect rallies into potential drops and then movements upwards into the Santa rally. Now, a lot of people are talking about this, but that doesn't mean that it won't work. We have seen some seasonals not play the game over 2024, most notably where we expected the shorts to come through. A lot of people thought September, October. We ended up getting that August short, which led into pretty good Septembers and Octobers actually. But remember, this is all part of the normal cyclical bull market. In this stage, we are still moving forward, and we have to expect that at least until Q2, Q3 of 2025, we may continue to remain bullish. It's a good kind of peace of mind thing when you're looking at markets to say, at least I'm playing the averages. Now, booming confidence in the stock market. This is a big deal because we are seeing so much transactions. Basically, retail traders are going wild, and we have never seen confidence from the retail side higher than it is right now. Retail traders are getting in big time, and consumer confidence is huge. So this basically means that everybody's piling in. And over our last few videos, we shared the idea that we've never seen households more exposed to the stock market than right now. 42% of households heavily exposed now to stocks coming into 2025. Now, at the same time, we also saw corporate insiders start to sell. Now, it's not a warning signal that, wow, you've got to get out right now. But obviously, when they start selling big time, and of course, they did start selling big time post the pandemic. Remember, they were very early in this. It ended up causing a pullback back to pretty much where they started selling. Now, this will be something that we want to be looking at. Corporate insiders are cashing in a big way, and you'll notice that this is actually dropping off the chart here from Jason Gopfert. And what that's really telling you is they're selling big time. They're really saying, well, you know what? I don't think this is going to continue that much longer. Maybe it's a year, maybe it's a year and a half, maybe even 2 years. But as we know, the corporate insiders seem to want to cash in at this stage. Now, JP Morgan and other banks don't believe it's time to get out of the market, and we tend to agree with them. Most people are looking for rallies into the end of 2024, and most pundits are now going for 6,300. Now, it doesn't seem like too much of a stretch now, But of course, we started talking about this when we were in the 58s. And the reason why is because we think 62, I think it was like 50 or 40, something like that, was highly statistically possible. I tend to agree with these numbers, and obviously quite a few people are starting to jump on that bandwagon. Now, as we see semiconductors pick up, how could we figure out that might have been a real trend? Well, let's take a look back to 2016, a Trump victory. 2024, a Trump victory. Weakness in big tech after the victory was announced. Well, that seems pretty normal. And a beginning of a new trend in the start of December. Well, that seems to be where we are right now. So very interesting chart here. Could semiconductors be coming back big time? Well, that's going to come down to whether we continue to hold this trend line. We posted this chart over on our X account, links in the description down below, but we basically said time for some rotation. Now, since then, it's gone up a little bit more. We obviously spoke about this in our Monday macro, which pretty much was smash bang on the perfect levels. And a lot of it comes back to seeing that dark pool activity. But guys, just remember, this is the market. When you're in bull markets, you want to be looking for rotation, and you also want to be looking for signs of weakness. We don't have any signs of weakness yet in this market. Eventually, we're going to see it. And of course, we'll be looking at it and covering it here on the channel. So make sure to subscribe. But for now, you can't really go against these types of stats. Year-to-date returns, when we're coming in over 20% year-to-date, obviously 2024 into December certainly is, it's 90% bullish. You know, that's a pretty good stat. You can see people like Tom Lee and Fundstrat believe it's bullish as well as JP Morgan. And even the Bitcoin market seems to be bullish, which really is showing you things like risk on right now. Of course, we've already seen these stats before. When we had a strong September close to Bitcoin, we believed October, November, and December were all going to be bullish, and not just a little bit. And so far, so good for the crypto markets. But remember, the crypto markets are moving into potentially phase 2 and phase 3. At the moment, we've seen large caps. We've seen 2017, particularly 2017 coins start to move up. But any newer coin I've noticed hasn't really been moving in the same way. So they're the coins that were minted back in the 2020, 2021 bull run. We're just not seeing those find the same level of buying pressure just yet. Have we seen Ethereum outperform since we spoke about it? Absolutely. 2 weeks to 3 weeks now of overperformance. We'll look at that soon. So could we be going into alt season? Yeah, it looks like we will be going through this, and the next 20 to 30 days for crypto particularly will be a very interesting point. We'll continue to update as we see this unfold. But do remember, you've got to be in early if you're going to get into these moves. If you jump in through a 50, 60% move, it is notoriously bad for you. BTC dominance is also showing us the same thing. The beginning of alt season, the beginning of a movement somewhere else, posted this over on X, and you'll notice here that we break the trend line in dominance. And as soon as we see that, traditionally, that's been a kind of go signal for other markets. Now, as promised, let's take a look at these huge transactions. It looks like someone just went bullish on semiconductors. Take a look at this, the third largest dark pool transaction in bull semiconductors coming back in, and it's near the lows. Yes, it's a pretty big deal. And of course, that coupled with that 2 times leveraged NVDA position last week kind of shows us that maybe they mean business when it comes to pushing semis higher. It's not the only transaction we've seen either. It seems like we had a few others coming through that are a little bit small on SMH, which is the main ETF that people trade. Another kind of warning sign here, a little bit more for SMCI, the largest dark pool ever traded and recorded, popped through SMCI after that nice rally off the bottom. Would I be buying here? Personally, not really. But this is a key resistance, a key supply, and certainly worthwhile paying attention to. Would I go short SMCI? I wouldn't. But anyway, I just thought I would bring that in because that is a massive transaction, the biggest ever recorded in SMCI's pretty much recent history, which is a big deal. In terms of earnings, we still have some earnings coming through, but let's jump on over to the stock market itself and look at some of the options flows and the TA. Firstly, what have we got going on in S&P 500? Still very bullish, actually grinding higher than I would think this week. I thought we might see a little bit of sideways action, but as you can see here, we're still at a point where I probably wouldn't enter too many new index positions. Instead, I'd be looking at sectors such as semiconductors, such as other areas of the market, because yeah, when you get up here and you get to these levels, you often go into chop or even a pullback. If you notice when I get these types of reads and we go back through history, you might see that they tend to be periods of, I would say, underperformance. I mean, I'm not a soothsayer, but yeah, you might want to take a look at this market and kind of couple it up with that seasonality. Remember, until the 15th, traditionally we've been sideways. That's not to say sell the positions. We are super bullish still here on the markets. And you just have to be, because right now the data says so. Remember, you need to be most concerned when somebody is not willing to switch their opinion. If you're bullish and you're bullish for the right reasons, that's all good. It's someone that's inherently bullish. So there are people out there, like, I'd probably say Tom Lee is incredibly bullish on the markets. Will he switch? I don't know. What do you guys think in the comments section? Will he remain bullish when you don't want to be in the future? Time will tell. Let's move over now to the futures market, which is continuing to push up here. We're at 60.85. Here are the new options highs and lows. Obviously no signs for a dip just yet, but we will expect dips to be, of course, bought up. And you'll notice over here when you look at the S&P 500, take a look at these key levels. And what you might notice is that we have very, very strong 6100 zones. So effectively 6100 is now the big call wall. You have to think the market's going to try to get to that level. That's really the next big pull. And past 6100 becomes 6200. So we're in positive gamma. You don't want to short this market. We've mentioned that quite a few times before. And if you were trying to get through this week and make a little bit of money, I wouldn't have said covered calls would have been the worst. Time will tell whether that pulls back a little bit. NVIDIA is certainly in positive gamma, pushing through that 145 level. And you'll notice here again, pretty serious zone. 145, currently 145.14 at the time of recording. We got through 140, entering into all this positive gamma on stocks. And now we may push into the 148, 150. And you guys know how big a deal a daily close above 150 would be. That is a huge deal for semis. NVIDIA's been struggling with it for ages. It is certainly one we want to be watching. What about Tesla? 360 all day. That's all that matters. 360, 360, 360. Can we push through? We'll see if we can. US 10-year, that's been dropping, waiting for non-farm payrolls for further movements here. I thought I'd switch it up a little bit, but this is actually one I didn't put in. I forgot to put in a large transaction of treasuries. So we did see another large transaction. And I just really want to reiterate this. If it's in the press, it's in the price. Guys, does it prove any more that you should not be listening to the talking heads? Yeah, maybe I'm a talking head, but you know what I mean? These billionaire talking heads that just are incredibly capitalistic and greedy. When it comes to what they're doing, they do push you around in the markets. Many of them saying, oh, treasuries is the worst, treasuries is the worst, treasuries is the worst. Yet every large transaction we're seeing coming through is supportive of potential accumulation. At the same time, you've got Ray Dalio going out there at the moment and telling people to do all these things. And at the same time, I've actually had a look over his details and he's been pretty heavily underperforming the market for the last decade. So you've just got to remember, it's not what they do. It's what they do. It's not what they say. And at the moment, you really need to think about that when you're looking at these markets. Not saying they don't make money, they totally do. But sometimes you are the exit liquidity for them. Let's move over the high yield bonds. You'll notice here we've got a nice series of higher highs and higher lows coming through on the bonds market. We suspected this back in November. Things are looking really, really good. And the market continues to be bullish on the bond side. US dollar, just in the middle of nowhere. This is going to be a non-farm payroll special. Look for our special later on this week on Friday as we cover off what's happened to non-farms. There's going to be, I think, a large position on the dollar, and we'll be watching very closely as it could have massive ramifications for metals such as this, which is gold, which is waiting for it, and also some other things out there, including the Chinese markets. Now, when it comes to silver, we really like silver still. Gold's pretty much just holding where it technically should be finding buyers, and silver has moved up more strongly. 3150, going to be a big breakout level for double bottom players, obviously looking at this overall pattern. We already like silver, obviously down in these lows here, and as we've marked, and the trend line, etc. And so far, I'd love to see it through 3150. Silver has a bit of playing to catch up to do, so it could be a nice move. Now, I thought I'd get rid of gas for a day because US oil sucks at the moment. It's stuck in a range, so if you're a range-bound trader, fair enough. But natural gas coming back into the spotlight. Now, you guys know I hate natural gas. I don't like looking at natural gas on the charts because they call it the widow maker because it trashed people trying to buy the dip over here. And a lot of people got stuck in these positions. So be careful with natural gas. However, that does look like an inverse head and shoulders. I've marked this 350. Things certainly looking a little bit better for natty gas at this point. What about Tesla? 360 all day. That's all that really matters. Still in a bull trend, as we've said. Pull back in time. Nothing wrong with that. Big momentum. Currently moving up. Get through 360. Maybe make it to 400. What about semiconductors? Well, as we mentioned, a large trade in here, guys, and a very nice trend change. So realistically, this is a good first sign that semis are coming back into focus. And again, it's against the general media. A few people posting, how can it be going up with all of this negative news and the China situation, everything like that. Remember, don't try to interpret those things. Most of the market's already ahead of you. And if it's in the press, it's in the price. Follow the price action. And so far, it looks like the price action's pretty good. NVDA pushing through those call walls, obviously breaking the 140, which is a big deal. And yeah, continuing to move on. If it gets through 150, well, we know that could open up 175 for this. Now, what about China? A lot of people looking at this and saying, can we get into a long yet? Yeah, if you're a position base or an investor, sure, you probably could. Anywhere in here is okay. But we didn't quite nail that full supply level. I would have liked to go even higher. I think China is still looking good. And what I'm looking at particularly is, of course, copper, which you can see here on the charts, which broke up, which is a big deal. The dollar index, which we'll be looking at, and then also iron ore. And I have liked what I've been seeing in iron ore spot. Overall, a fairly bullish move on iron ore spot in recent days. And this is all boding well, but it's not quite in there for a day trade or a swing trade at this stage. Only really an investor looking at 6 to maybe even 9 months would be really looking at HSI at this stage. Aussie 200 continues to power on, which is really nice. That market's looking pretty good at this stage. And US 2K still having a pullback in time after having the strongest of the indices over a November period, up over 10%. So that's pretty good for Russell. We expect the Russell to improve again in December at this point. NVIDIA, and NASDAQ, driven by NVIDIA. This market's looking quite overbought on the smaller time frames here. Obviously still very, very bullish across the board, and it can move higher. Few people ask me, what do you think of some of these positions? Well, let's just have a quick look here. Apple obviously breaking to the upside, which has been strong this week. People asking about Amazon, another breakout to a new high after really doing nothing for quite some time. So you got to remember these have all had 6-month kind of sideways action. One of my favorite stocks, Microsoft, breaking out as well. Maybe it's going to start playing catch up. It is a higher multiple, there's no doubt. And of course, also Google, which has been notoriously a bit of an underperformer in these Mag 7, it's starting to bounce up as well on the weekly. And you can see here, it's got that inverse head and shoulders, which hasn't quite completed. In fact, if you took the distance, which I'll do right now together, we'll break that down, you'll notice that it's actually pointing to an all-time high. So will these stocks catch up? Well, if the market is going to continue being bullish, then you would have to hope so. Let's move over to crypto now for a moment. Ethereum versus Bitcoin. It looks like a lot of people are starting to draw this one. We were probably early on this, but a lot of people starting to point out what's going on. I don't think it's going to be another repeat of a false move for Ethereum. A lot of people get caught up in this too early for runs on crypto. I think this is more likely the ratio it's going to come off. So far, so good. Absolutely no real change of trend here for Ethereum yet. And we all know where it's going to come in. It's going to come in from breaking that downward, that trend line itself, which we'll look at in a moment. If you have a look at Ethereum dominance, it's at 13%, can easily go to 19%, and that would be a point where you'd start to say, should I be taking some profit or not if you're a position-based buyer? Let's have a look at Ethereum. Big level, guys. Look at that. Beautiful stuff. Hitting into the resistance. This is certainly a resistance level for Ethereum. If it's able to break and close above like a 39.50, I think that's a big deal, and that will look for pullbacks to be met by bull demand, and in general, aiming for a new all-time high. So that's a pretty big deal here for Ethereum, and obviously a lot of traders and investors getting excited about that. From a Bitcoin perspective, it's doing a little bit better than I thought it would. Now, what I mean by that is, it's not that I'm not bullish Bitcoin, I so am, but at the same time, I kind of still suspected it to have a little bit more of a pullback in time or a pit. So at this stage, it's pushing that 100K barrier again. Will it push through? I mean, if you're looking at this, it's a series of higher lows. It certainly doesn't look negative. Maybe this is where it's going to push in. We're looking for 130K ideally for Bitcoin. It does tend to lead. Sometimes you see like that kind of false break. A lot of people point towards the rally of all cryptos in terms of Bitcoin starting, Bitcoin pulling back, Ethereum making a false break, then Bitcoin going on for one last run, then Ethereum coming through, which would point towards a January Ethereum. And then, of course, the movement up and everything else. I don't know if it's going to be like that. At this stage, both look really good. And yeah, we'll see whether this can nail 100, but it doesn't look weak. I wouldn't say that's like, oh, wow, I absolutely hate Bitcoin at this price. It's still like, even the weeklies, generally speaking, it's still at a point where I would expect consolidation. I think there are better coins out there for profit right now. But yeah, it's not bad if you're a hodler for Bitcoin, which I'm sure most of us are. Let's move down now to the news that matters. And really, the only news left this week is going to be the jobs numbers. We need the non-farm payrolls numbers. That's going to be what matters. This is probably the most important read of the month nowadays, and we'll see how that plays out. Guys, if you enjoyed today's video, then remember to subscribe, smash that bell icon, and of course, check us out over on X. To summarize today, I guess things still look bullish. We definitely want to be having a heavy level of skepticism, though, into 2025. There's no doubt that FOMO, that the biggest free, easier money to be made has been made, and now we're in the bottom of the last third. So basically, this is where we get into the point where everyone's going to say they're a millionaire and they're the best trader ever and investor, and this is where you've got to be most careful. It does look like rotation is going to be the key to 2025, and of course, we talk about it in our private group, along with little tidbits here on the channel every so often. Thanks so much, everybody. Bye for now.